Hi everyone, Metaplanet's second quarter earnings presentation is out. Let's dive straight into it. Quick disclaimer, this is not financial advice. This video is my personal interpretations of the earnings report. Please do your own research. Here's what we'll cover today. Wow, notice that there's a whole section for Metaplanet Securities and BitBonds. Nice. Let's start with section 1. Second quarter 2026 financial results. Let's look at how far Metaplanet has come over the past year. Comparing the first half of 2025 to the first half of 2026, Bitcoin holdings grew from 13,350 BTC to 43,000 BTC. Cumulative capital raised grew from 187 billion yen to over 580 billion yen. The number of shareholders more than doubled from 128,100 to 243,700, and revenue from Bitcoin-related operations grew from 1.9 billion yen to 4.74 billion yen. Now let's break down the operating results. In the first half of 2026, revenue came in at 4.9 billion yen, up 133% year-over-year. Operating profit was 3.331 billion yen, up 136%. Ordinary loss for the first half of 2026 was 182 billion yen, and the loss attributable to owners of the parent was 182 billion yen. These are non-cash, mark-to-market valuation losses tied to short-term Bitcoin price movements. Metaplanet did not sell any Bitcoin during this period, so these figures don't reflect realized losses. I'm focused more on the revenue and operating profit since it represents more of what the management has achieved within their control. Whereas the valuation gains and losses section, in my view, are out of management's control due to the fluctuations in Bitcoin price movements. Breaking results down by segment for the first half of 2026. Bitcoin-related operations generated total revenue of 4,742 million yen, with income from operations of 4,279 million yen. The hotel business generated revenue of 200 million yen, with income from operations of 71 million yen. After accounting for corporate and other expenses of 1,019 million yen, consolidated income from operations totaled 3,331 million yen. Overall, I'm quite satisfied with the results, since the Bitcoin-related revenues have more than doubled and the segment operating expenses as a percentage of revenue seems to have improved. Still remains to be seen if it will improve further as it scales up. I am rather concerned about the corporate expenses tripling from 300 million to 1 billion. I wonder why would this costs increase so significantly. I'll probably do a separate video after I dive deeper into the financials from the audited report. Let's walk through how Bitcoin's price movement affected Metaplanet's BTC Net Asset Value during the first half of 2026. Starting point. BTC NAV at the end of 2025 was 481 billion yen. During the first half of 2026, Metaplanet acquired additional Bitcoin worth 99.7 billion yen at cost. However, a valuation loss of 184.2 billion yen was recorded, along with a foreign exchange adjustment of 12.5 billion yen. These are standard accounting adjustments at end of period. That brought BTC NAV as of June 30th, 2026 to 409 billion yen. For reference, using the Bitcoin price as of August 12, 2026, and factoring in a price impact of 24.9 billion yen since end of June, the reference BTC NAV value stood at 434 billion yen. Looking at the full year forecast, for fiscal year 2026, Metaplanet is targeting revenue of 16 billion yen and operating profit of 11.4 billion yen. Through the first half of the year, the company has already achieved 4.944 billion yen in revenue. That's just roughly 30% of the target. I am concerned on how the management intends to catch up for the remaining of the year, since we are already in mid-August and there hasn't been any substantial fundraising to fund the Bitcoin income generation business. I think this is going to be a rather challenging target to achieve based on the current situation. I don't think the revenues from Metaplanet Securities could make up for the shortfall this year and would have to be generated mainly from the derivatives desk. Due to Bitcoin's inherent price volatility, the company has refrained from providing forecasts for ordinary profit and net income. This makes sense and has been standard across previous earnings reports. Looking at Metaplanet's Bitcoin accumulation over time, starting from just 141 BTC in the second quarter of 2024, holdings have grown rapidly up to third quarter of 2025 and started to slow down, which coincides with Bitcoin bear market. As of June 30th, 2026, 43,000 BTC. Metaplanet ranks third worldwide among publicly listed companies by Bitcoin holdings. Now, BTC per share, measured here as BTC per 1,000 effective diluted shares. This has grown consistently, quarter after quarter, reaching 0.026355 by Q2 2026. That's a 6.6% increase quarter over quarter in the most recent period alone. I'd recommend to check out CEBE Framework by Bobby to dive deeper where the capital structure is considered, such as subtracting the claims on the balance sheet to have a calculated residual BTC per share value for those that are interested. Let's look at how BTC Yield translates into actual Bitcoin gain for shareholders. Beginning Bitcoin holdings for the quarter stood at 40,177 BTC. Applying a BTC yield of 6.6% gives a BTC gain of 2,637 BTC. Multiplying that gain by the Bitcoin price of 9,523,104 yen produces a BTC yen gain of 25,116,000,000 yen. In other words, the increase in Bitcoin held per share during the quarter was equivalent to over 25 billion yen in value accretion for shareholders, achieved without them buying any additional Bitcoin themselves. Now let's turn to Section 3, Market Environment. Inflation has returned to Japan, but deposit rates haven't kept pace. As of June 2026, the nationwide consumer price index rose 1.7% year over year. Meanwhile, the Bank of Japan's policy rate sits at 1%, and the 10-year Japanese government bond yield is 2.8%. The real interest rate on ordinary bank deposits is estimated at negative 1.4%. That means the 1,126 trillion yen in cash and deposits held by Japanese households is gradually losing purchasing power. So where is that household wealth actually parked? 1,126 trillion yen, roughly 7 trillion US dollars, sits in cash and deposits. Japanese government bonds and FILT bonds account for 20 trillion yen, or about $126 billion. Corporate bonds account for just 10 trillion yen, roughly $63 billion. That means corporate bonds represent less than 1% of household financial assets in Japan, a striking gap compared to other developed markets. Zooming out to the broader Japanese bond market, government bonds and FILT bonds make up 81% of the market. Local government bonds account for 5%, other instruments make up 6%, and financial and non-financial corporate bonds at roughly 121.9 trillion yen, or about $772 billion, represent just 8.5% of the total. I guess the key point here is that the corporate bonds remain a small slice of Japan's bond market, and the publicly offered non-investment grade segment is effectively undeveloped. For context, let's compare this to other developed markets. The US high-yield bond market is approximately $1.8 trillion. US leveraged loans total about $1.5 trillion. US private credit is estimated at $1.4 trillion. Euro-denominated high-yield bonds total roughly $500 billion. Japan's domestic public non-investment grade bond market, by comparison, is effectively undeveloped. While the US and Europe have built mature high-yield markets, Japan still has substantial room to grow. This gap represents Metaplanet's market opportunity, built around two goals. First, capturing domestic demand for yield, attracting yield-seeking Japanese capital to expand the company's yen funding base. Second, advancing the yen-denominated high-yield market itself by offering new investment options to retail, corporate, and institutional investors across Japan. From my perspective, this is Metaplanet's unique value proposition that differentiates it from other Bitcoin treasury companies. This is no doubt a huge undertaking due to the massive scale of change the macro environment is evolving simultaneously. Moving on, Metaplanet's vision for a Bitcoin native financial platform. Two major trends in Japan are converging around Metaplanet's platform. The first is the integration of digital assets into mainstream finance. The amended Financial Instruments and Exchange Act has been enacted, moving crypto regulation into the FIEA framework. New tax rules are planned, including a 20% separate self-assessment tax on designated crypto assets, with a 3-year loss carry-forward. Qualifying crypto assets will be exempt from year-end mark-to-market taxation for corporations, and regulation-compliant yen stablecoins such as JPYC and JPYSC have already launched. The second trend is the broader shift from savings to investment. Amid inflation, there's growing focus on the real returns of cash and deposits. Policy initiatives like the new NISA program and Japan's push to become a leading asset management center are accelerating this shift. With 1,126 trillion yen still sitting in cash and deposits, there's a significant business opportunity in offering income products that meet investors' yield needs. Metaplanet sits at the intersection of both currents as one integrated platform. Metaplanet is moving beyond being just a Bitcoin treasury company and into its next phase. Phase 1 was Bitcoin treasury operations, building BTC reserves while strengthening capital raising and earnings capacity. This served as the foundation for everything that follows, spanning from 2024 onward. Phase 2, which the company is actively building now heading into 2026, is the Bitcoin native financial platform. This phase has 4 layers. The gateway layer provides multiple touchpoints with users and investors through media and Bitcoin-related services. The marketplace layer connects financial products with investors. The products layer originates yield products, bonds and preferreds, against a robust financial foundation. And underpinning it all, the balance sheet and income generation layer provides foundational support for the key business initiatives driving shareholder value. Let's look at how this platform is coming together, layer by layer. At the gateway level, Bitcoin.jp and Metaplanet Ventures, covering media, distribution, and a Bitcoin venture ecosystem including custody, payments, and lending, currently live and building. At the marketplace level, Metaplanet Securities, handling private placement fixed income, both the company's own issuances and third-party issuances, including high-yield bonds, with secondary market access, currently live. At the products level, digital credit and asset management, covering Bitcoin-backed bonds, preferreds, security tokens, and Bitcoin income products for institutional mandates, some live, some announced. And at the base, the core engine, Bitcoin treasury operations, expanding the balance sheet and strengthening income generation to provide the foundation that supports the entire platform, currently live. Building a vertical integrated platform is no easy task. If successful, this would translate to increased profitability and margins across the value chain. I believe if Metaplanet achieves in doing so, this would be a strong business moat. I don't see another new player entering the space in Japan and building a similar structure. Metaplanet Securities is a fully online corporate bond platform connecting corporate funding needs with investor demand. Companies seeking to issue corporate bonds, whether listed or unlisted, of any industry or size, can complete bond issuance entirely online. On the other side, Yield-seeking investors gain access to new corporate bond opportunities suited to a wide range of investment needs, from retail investors to corporates. As a Type 1 financial instruments business operator, Metaplanet Securities handles three core functions: issuance review and proposed terms, private placement handling and private secondary distribution, and interest and redemption. From issuance to redemption, every required function is delivered online, and notably, the platform handles bonds issued both by Metaplanet itself and by third-party issuers, all on the same platform. This platform has real history behind it. It began as CEBO, founded in 2019. In 2021, it registered as a Type 1 financial instruments business operator and launched the CEBO platform. In 2026, it joined the Metaplanet Group and was renamed Metaplanet Securities. Over that time, the platform has supported more than 40 private placement bond issuers and handled more than 100 bond issues, from structuring through redemption. A new milestone. Metaplanet has begun issuing yen-denominated bonds, called BitBonds, with Metaplanet Inc. as issuer and Metaplanet Securities as the private placement agent. Looking ahead to Phase 2, the company is conducting a joint study on tokenization, exploring Bitcoin-underpinned credit products, stablecoin settlement and distributions, and security token rights management. This remains at the joint study stage and does not represent a commitment to issue any specific financial instrument. Metaplanet's plan to build out Japan's corporate bond market unfolds in three phases. Phase 1, currently in progress. Issue: creating new corporate bond investment opportunities. This means issuing corporate bonds offering attractive yields as a listed Bitcoin Treasury company, broadening investment options for investors across Japan. Phase 2, under consideration, the use of stablecoins and security tokens to enable faster, more frequent interest payments. This would explore using stablecoin settlement and security token rights management to shorten the time between entitlement determination and payment, potentially enabling high-frequency interest payments, such as monthly distributions. Phase 3, the development target, building a tradable market, enabling secondary trading. This means building a secondary market for corporate bonds through market making and liquidity provision. It's described as the most challenging of the three phases. Let's examine the balance sheet as of June 30th, 2026. Total assets consist of BTC NAV of 409.5 billion yen, plus other assets of 8.7 billion yen. On the liabilities and equity side, debt totals 77.3 billion yen, warrants total 0.6 billion yen, Mercury preferred stock has a notional amount of 23.6 billion yen, and common equity, shown here for reference, totals 316.7 billion yen. Key financial soundness metrics. The equity ratio stands at 81.4%. Coverage, an indicative measure dividing BTC NAV by total debt and preferred stock, stands at 4.1 times. Total debt plus preferred totals 100.9 billion yen. I'm pretty comfortable with the equity ratio at 81%, even after Bitcoin price declined by 50%. I recall management mentioned previously that it would target a 4-to-1 ratio of leverage. We seem to be roughly at that point now. Here's how Metaplanet's capital structure ranks from senior to junior as of June 30th, 2026. At the top, most senior, the credit facility, with a notional amount of 67.5 billion yen, cumulative total of 67.5 billion yen, and coverage of 6.1 times. Next, unsecured senior notes, 8 billion yen notional, 75.5 billion yen cumulative, with coverage of 5.4 times. Then, other liabilities, 1.8 billion yen, bringing the cumulative total to 77.3 billion yen. Mars preferred stock currently shows no balance outstanding, Mercury preferred stock, 23.6 billion yen notional, bringing the cumulative total to 100.9 billion yen, with coverage of 4.1 times. And at the most junior position, common equity. These coverage figures are indicative reference metrics only. They do not represent a credit rating or guarantee of payment. How does Metaplanet's coverage compare to peers? Metaplanet's unsecured senior notes carry coverage of 5.4 times, and its Mercury preferred stock carries coverage of 4.1 times. For comparison, Strategy's STRF preferred stock carries a BTC rating of 12.9 times, its STRC preferred carries 3.7 times, and its STRD preferred carries 3.0 times. It's worth noting these two metrics. Metaplanet's coverage and Strategy's BTC rating use similar calculation methodologies but aren't perfectly comparable due to differences in measurement dates and Bitcoin price reference times. How resilient is this capital structure to a falling Bitcoin price? A coverage ratio of 1.0 times represents the level at which BTC NAV would equal total liabilities plus notional preferred stock outstanding. In other words, the break-even point. As of June 30th, 2026, with Bitcoin at 9.52 million yen, or about $60,300, coverage stood at 4.1 times. If Bitcoin fell 30% to 6.67 million yen, coverage would still be 2.8 times. If Bitcoin fell 50% to 4.76 million yen, coverage would be 2.0 times. Even in a severe scenario where Bitcoin fell 75% to 2.35 million yen, coverage would sit right at 1.0 times, the break-even level. This is a mechanical sensitivity analysis, not a forecast of future Bitcoin prices. Are there risks of margin calls? Yes. But is it manageable? Yes. I've covered that in my previous videos. Finally, Section 7, BitBonds, the establishment of a new corporate bond issuance program marking Metaplanet's full-scale entry into Japan's bond market. Here's the underlying logic of the BitBonds program. As Bitcoin appreciates, the balance sheet value grows. Combined with operating cash flow, this builds payment capacity. That capacity supports the issuance of yen-denominated senior bonds, BitBonds, issued by Metaplanet Incorporated. Those bonds, in turn, provide funding that becomes a new pillar alongside common equity, working toward a permanent funding base. In short, this links Metaplanet's Bitcoin-backed balance sheet with its group securities company's distribution network. The biggest difference I see with BitBonds and preferred shares are that there is no requirement that the interest be covered solely by income from operations. Bitcoin price appreciation, or the ability to monetize Bitcoin, is an important part of the credit story, but the legal obligation is simply to pay the fixed yen amounts when due, which simplifies it a lot, but of course, with a trade-off of refinancing risk. What exactly are BitBonds? They're designed as a yen-denominated fixed-rate bond built around three core features. Currency, yen-denominated. Funding, interest payments, and redemption are all conducted in Japanese yen. Interest, fixed rate. The coupon is set at issuance and remains fixed through maturity. Priority of claims, senior to equity, though specific rights and priority vary by series. Currently, BitBonds are issued through domestic private placement, with issuance terms set forth in the relevant documents for each series. How does the BitBonds coupon compare to the broader Japanese retail corporate bond market? Looking at all publicly offered domestic corporate bonds issued to individual investors between May and July 2026, with original maturities of 5 years or less, the simple average coupon across that universe was 2.24%. BitBonds are positioned notably above that average, offering a materially higher coupon relative to comparable retail bond issuances in the market during this period. It's worth noting that direct comparisons have limitations, given differences in creditworthiness, credit ratings, disclosure methods, collateral, issue size, and liquidity between BitBonds and these comparable issues. Together, Metaplanet's common stock and BitBonds now offer investors two distinct ways to access the company's Bitcoin strategy. Metaplanet common stock offers amplified exposure, equity exposure to the Bitcoin strategy, where the company's share price directly reflects changes in the value of the Bitcoin it holds. BitBonds offer yield, yen-denominated, fixed-rate senior debt based on the company's creditworthiness, with fixed interest and principal repayment that is not linked to Bitcoin price movements. Together, these represent a spectrum running from capital appreciation on one end to yield on the other, giving investors a choice in how they participate in Metaplanet's strategy. Alright guys, that's a wrap. Overall, I'm still very bullish on Metaplanet. Metaplanet is building and executing during this phase of the bear market. Personally, I'm bored as hell with the current Bitcoin price action. I'll make a follow-up video after I dive into more details of the financial report. Let me know in the comments if you'd like to know more about a certain area. See you guys in the next video. Cheers.